Sarah Eisen talked with Brookfield's Bruce Flatt at the FII conference in Riyadh and started by asking him about the deal.
President Trump and Commerce Secretary Lutnick announced a number of deals for the Japanese fund to invest in the United States, and the one that we're involved in is an $80 billion investment into new nuclear plants in the United States. And we're super excited about this, and probably the most important thing isn't the $80 billion, but we needed to have scale to be able to build supply chain across America. And the nuclear industry had gone downhill, and just nobody was building plants. And to be able to build the first one, you need to have the belief in, and the supply chain needs to believe that you're going to build out the whole business, and it's going to sustain itself for a long period of time. So the whole idea behind this is that we're going to build out the new industrial platform for nuclear in the United States, and all the suppliers will build it out, and we'll be able to have a whole new business in America based off of nuclear, and that's why the U.S. government is backing it, and we're very excited.
How is it structured? So do you line up financing?
So the U.S. government is buying $80 billion of plants from us and
from Westinghouse, which you
from
own
Westinghouse,
a little bit less, or a little more than 50%.
We own half of it.
Okay.
And with our partner Cameco, and so Westinghouse will build all the plants. The U.S. government will own them, and
so they're financing.
They're going to be financing them, and so we're just going to be the builder of those plants. Whereas on last week, we announced another transaction, which is with South Carolina, and we, Brookfield, are going to be buying the plant. Westinghouse will be reviving the plant and rebuilding it, and we will actually own that plant with a number of our clients.
Is this the new way that you're sort of thinking about structuring deals? I mean, this whole idea of public-private partnership with the U.S. government really taking some big swings is new.
Look, I just think this government is focused on less regulation, more business, lower taxes, and they also want to, if they're going to lean into investments, if you can convince them that we're going to reindustrialize a business in America, they're going to be behind it. And but they want the people of America to participate if there's great success, and I have no problem with that. And this is just I'd say it's more entrepreneurial than it might have been in past, but I think the U.S. people definitely are owed something if they help us achieve what we want to achieve, and equally so, we'll get our share too, because it should be very successful for us.
How long will it take to build these nuclear reactors?
You know, the first one that we're going to build in South Carolina is a rebuild, and it'll be on by 2030. These other ones will take 6, 7, 8 years, but you need to start. But what the hope is that as you keep building and as you build supply chain and you get more experience, we're going to be able to bring the time down over time. And I think over time we're going to get better and better at it. We used to be in America, we used to be really good at building plants. We lost that, and this is going to re-energize the whole business.
It is interesting that you bought Westinghouse out of bankruptcy back in 2018. What did you see that nobody else did at the time as far as the future of nuclear energy?
Yeah, look, it's base load, it's clean, it's extremely efficient, it's very safe today. And because of that, it was going to be needed in the world, and it was inevitable. It was going to be needed. It just took a revolution in artificial intelligence for everyone to figure out, yes, we have to have it. Because remember, what we're going to do is double the grid, the energy use in the next 15 years. Double. It may be more than double. And we're going to need all the power we can get.
Yes.
We need solar, we need gas, we need nuclear, we need hydro, we need all of it. And it's going to be extremely important that we focus on it. And so when we invest into it, because our business is about looking at things, seeing a long-term vision, making sure you protect your downside, and usually the good things take care of themselves.
So hence the Bloom Energy deal, which was also announced a few weeks ago. Fuel cells. I mean, it's all about what you're talking about, the demand for power, which is skyrocketing.
So the data centers used to be, when we built data centers 10 years ago, they were 50, 100 megawatts. Today, we have customers taking 1,000 1 gigawatt from us for one data center. So these were enormous amounts of power required, and the capital, why this can only be done by a certain few, is the capital for that. If you take 1,000 megawatts or 1 gigawatt of power, the building and the infrastructure and the chips and the servers that go inside of it for an AI factory is $50 billion. This is a lot of money, so it can't be done by everyone. There's few, but not that many, and it's highly sophisticated. And people always talk about, is there too much?
Too many data centers?
Too many. People ask, are there too many?
Some people think it's a bubble.
It's not, and it isn't, because it's hard to do this. Everyone says they're going to build something. It's not easy to build. You need to find the connectivity, you need to find the power, you need to build the buildings, you have to get the chips, and you need to have 50 billion per AI factory. This can't be done by everybody. And remember, most of these are being contracted to the major technology companies, and they all today have credit better than most countries in the world. And therefore, your credit counterparties are almost as good or better than a U.S. Treasury.
But one thing I hear sometimes is that we're building so many data centers. First of all, they take a really long time to come to fruition. And second of all, the technology will change and get more efficient. And then will we be stuck with too many?
You're not building enough data centers, first point. Second, the data centers, the shell, the chips are inside, they go away in 5 years. You amortize those in 5 years. So that will go away, and the chips are going to change, and but you've amortized them in 5 years. So we're not building enough. As much as we're building today, we're not even building half of what we can, and you can't build enough. Like, I actually have the opposite.
Why do you say that?
I have the opposite answer for you. The countries in the world used to build roads and railways, and today what they need to build is AI infrastructure. And if you do not, in a country, if you do not have sovereign and AI infrastructure to be able to lay the pipe for your companies, they will leave. And that's what America's figured out first. That's what with the administration, that's what the deal we just did with them is. And there's going to be a number more, because we need power and we need AI data centers in America, and every country needs them. And if you don't have it, you'll be behind.
Are you talking to a lot of other countries about this too?
Yes, we're in Sweden, we're in France, we're talking in Canada, we're in many other countries in the world, and they're behind, remember, because the 8 largest technology companies are centered in the United States, and the center of AI today is in the United States. But eventually it's moving out, and countries are going to have to have figured out they have to have this layer of infrastructure, which used to be a pipeline or a road or a railway. It's now the digital infrastructure in the country, and we're behind.
Well, so what does it mean for Brookfield? I mean, you're in so many different businesses. It's amazing. Private equity, private credit, real estate, retail, insurance, infrastructure. How much of the business is now pivoted toward this AI data center build out?
So we're a diversified business, and we try to build out all these things because our clients want them. And they're all similar. They're all similar businesses. We run real assets around the world for our clients and build them out. But from time to time, we heavy up on certain sectors when capital is flowing to them in excess of in other areas. And sometimes it's one area, and sometimes it's a different area. Today, it happens to be where the major amounts of money are flowing is into artificial intelligence infrastructure and into power to drive that infrastructure. And that's where the big heavying up is. And it's not that we're not running all of our other businesses. Our real estate business we just raised a big fund for it.
I know. I'm curious about it.
We're raising a number of private equity funds. We have our normal infrastructure fund, which is the largest in the world, for just, I'll call it baseline infrastructure, but we separated out AI infrastructure into another fund because this fund is supposed to be diversified, and you can't engulf a fund with AI infrastructure, so we had to have one specifically for that.
Got it.
And we did that with our transition renewables business 5 years ago, and it's been highly, highly successful. And I'd say that's given us a huge advantage to be able to do the things like Westinghouse. That's where we had it originally in our private equity fund. We found Cameco to come in and partner with us, and we put it into our renewables fund, and that's the owner today, and they've been highly successful.
So clearly data centers are the hottest part of real estate, but what about office? Because you're exposed there. I think you told me last year that we were bottoming. So what does activity look like now?
Activity, most companies in the world are short space. They're all calling their people back. They have no desks. They need more space. Rents are up 50% in most buildings in major cities in the world. They will be up another 50% soon. Interest rates are coming down, both on the short end and on the long end, and that is going to energize all real assets, but in particular real estate, because it got hurt the most in this cycle because of COVID and rates.
Are you investing now in office?
We're always investing in real estate, and our opportunistic fund mostly has buy, sell, change, so it's more opportunistic type of real estate, but not. But we're doing office today as well.
And it's not just like the highest tier office that's working.
Our main focus in everything we do, not just office, not just real estate, but everything, is partner with the best and own the best. We try not to own second-tier stuff. Once in a while we buy a portfolio and it has some second-tier stuff, and over time we get rid of it all. Our goal is to own the best in the world, and today, in particular in office, people want to be in the best, and they're almost 100% full, and they're getting fuller, and rents are going up.
Other hot topic has been private credit and some worries about soft spots in the market. It's been big, growing business for you. I know you recently bought the rest of Oaktree, for instance. Do you still see as much opportunity in private credit as you did?
Yeah. So probably one of the major things that occurred in finance in the past 25 years is that the banks are using their balance sheets to originate, hold, for a short period of time, sell, and just move loans off the balance sheet. And what came about is private groups like ourselves who are actually holding loans longer term, and that's called private credit. And the business has gone from zero to $2 trillion, and it's going to go to $4 trillion and $6 trillion and $8 trillion and $10 trillion. It's not stopping. And no financial institution that makes loans never has some problems. They always have some. But there's no issues in private credit. This is a business that's going to keep growing, and it will be very, very large in the longer term.